This is Andrew Stotts of A Stotts Investment Research to talk about Hong Kong, where I see weak profitability and high volatility. Let's start off with GDP. If we look at the GDP breakdown of Hong Kong, first of all, we see that GDP is overall slow. For the last 4 quarters, you can see it's 2.05% growth. And what we can see is that's mainly driven by private consumption and secondly by exports. But the big drag right now is investment, which has really slowed in Hong Kong to a negative, actually equal to the overall amount of private consumption, or a little bit less. So it's a real drag. If we continue on and look at the overall market, what we can see here is earnings fell in 2015, and analysts are expecting it to recover at a relatively slow pace, 3%, 7%. It's the lowest ROE in Asia, but it offers the third highest dividend yield. So you get a little bit of return there from a dividend yield perspective. If we continue on and look at our 4 elements of FVMR, then what you can see is that overall it's the worst in Asia from an attractiveness perspective. First of all, ROE is lowest in Asia, so fundamentals are weak. It's moderately cheap due to this low price to book. Momentum is about in line with the rest of Asia, and risk is poor, mainly because it's got a relatively high beta and high volatility over the past quarter. So if we look at the sector performance, what we can see is that the top 3 largest sectors, real estate, 17% of the market, then financials, and then infotech. And of course, China 8 shares account for about 14% of the market. And we know that China 8 shares are pretty bank heavy, and that's trading at maybe 7 times for Chinese banks. So also the best stock and sector was consumer staples, which was up about 5%. And the best stock, major holdings, was up about 57%. The worst sector and stock was industrials, down 4%, and Johnson Electric Holdings was down 25%. Want more? Get access to additional research and articles and get your free membership and newsletter. Just go to babinow.com/join. See you there.